Hey guys, Steve here with the turtlefollower.com with the strategy session for Tuesday, October 7th. So I didn't really see this coming, but we kind of talked about it yesterday. The fact that the market was down about 30 points today. We talked about how we were potentially bouncing off this downtrend line and the 50-day moving average. And I said that if we had gotten to the point where we closed below, let's say, 1940, which would have been Thursday's close, that it could potentially lead to some lower prices, and it looks like that's exactly what happened. Once we were definitively below that, the market just continued to sell off. We broke the two down or uptrend lines, and you could see now what's happening is this downtrend line really is the controlling factor. So this one, this is the S&P futures. I don't see any reason we don't test 1900. Plain and simple. I think we have some definite room to the downside. We're only 25 points away. Hopefully we get to that level and we can bounce from there. All right, the NQs, the NASDAQ futures, again, broke below Thursday's low, Thursday's close, and you can see it just doesn't look like a good setup right now. The downtrend is definitely controlling. We broke down out of this, what we had as a consolidation. Now we're breaking down below these previous highs from here. So, short term, I would say we're definitely at least going to test this 39.25, which was the low from Thursday. I wouldn't see any reason we would not test the blue line here at 38.50. All right, again, just thinking about where we are in this channel. And, if you missed the video from this morning, definitely go check that out on this linear regression channel. But you could see we came into very overbought conditions, and now it looks like we're taking it back down to the mean of the range, which is right here around 38.50. So, looking here on the daily chart, again, I don't see any reason we don't test 38.50 on the NASDAQ. The Dow futures, this one is actually still in the uptrend. All right, you could see here the downtrend is very much intact, but so is the uptrend. We basically we tested almost both sides of this triangle that we kind of have drawn here. So we had this reversal signal from yesterday. We tried to break out, ultimately closed below the downtrend line. Today we had some follow through, and then again, once we got below the 50-day moving average, the floodgates opened, and we pushed down into this uptrend line. So you could see here, right now, 16,589 was the low from Thursday. And we closed, 30 points, 40 points above it. So for right now, I still think, ultimately we head lower. Whether we head down to, 16,236, that remains to be seen. You could see, though, if we do head to that level on the linear regression channel, we would be in oversold conditions. So maybe it doesn't happen. Maybe it, stops somewhere in between. But, with the way the other two markets are acting, I see no reason that we don't at least break that downtrend line or that uptrend line. And the last one is the Russell, and the Russell just looks broken at this point. We had this symmetrical triangle in place. Sure enough, we broke below that. Looked like we were going to bounce. Continued. We came down into this 1076 area. Bounced off of that. So the only saving grace that the Russell has right now is if we look at the horizontal line here of, say, 1065, we're still above that, where we've had these massive spikes and ultimate reversals. So I would say on the Russell, again, looking at the linear regression chart, we are still above we are actually testing this very oversold conditions. We're basically testing the second standard deviation move. And for right now, this looks like a sideways market. But again, I'm not sure how this acts if we start trading outside of this range here. But for right now, I mean, the Russell is definitely the one that has sold off the most, I would say. It has never, all of this year has not been in an uptrend, and is just really at the point where it looks like it's ready to just crash. Whether that happens or not, who knows? But for right now, if we don't hold this 1065 area, then I would say we at least move to 1000. All right, so let's take a look at our positions. We're probably going to be exiting some, as you probably already know. But this is Apple, and what we were looking at with Apple was we were still holding above this $98 level, and that was really the trigger that we were using to exit the trade. What happened in the past week or so is after this big move down on the 25th, instead of rallying back, Apple really just moved sideways and is now touching the bottom of this trend line. So I think what may happen with Apple is we may actually break down below $98, which first of all will trigger an exit. And second of all, if you wanted to, you could actually short this and put your stop right over, let's say, $100. With earnings coming up, though, just be careful with the earnings and everything like that. As you know, we're not, eventually I would like to get into the whole short side of it. But for right now, we're going to just continue to manage our risk by looking for longs. Maybe we'll bring some ETFs in, and maybe down the line we'll even look at using options to short. I've just heard of some horror stories about shorting stocks, and there's dividends and everything like that. So I want to make sure that we're doing something that I would do in my own portfolio. And right now, I very rarely short anything without using options. So maybe that's the way we're going to take a look at that. But for right now, the biggest thing you need to know is if you're long and we close below 98, we're going to be exiting Apple and maybe looking for a re-entry once it goes over 103, or maybe it sets up at another price. But we've had a good run. We're up about 20%. So we're not going to let that go back. We're going to take those profits and move on from there. ADM down 2.02%. You can see this is a similar setup to what I was talking about in Apple. All right, we kind of putting in this lower consolidation. Now we're breaking down below that level, and we actually already broke the 50-day. So for right now, ADM, we were using 49.08. I wouldn't be surprised if that doesn't get tested. You can see where we are on the linear regression channel on the weekly chart, coming right back out of overbought conditions. So maybe we revert back to the mean around here, 46. For right now, we are still in the ADM trade. We will be until we break 49 and close below it. Disney, we will be exiting Disney. We're actually using the stop here. So we gave Disney another shot the other day after this big reversal candle. So right now we're using the stop at 86.83, so say 86.50. So if we get a close below 86.50, that's when we will exit Disney. For right now, though, again, you could see here, if we get rid of this uptrend line, you could see there's pretty much a lower consolidation that now we are breaking down out of, and potentially, if you wanted to, again, similar to ADM and similar to Apple, you would be able to set your stop, say right here at 89, buy some puts, and see where it goes. Expedia, this one's actually the best one we've had so far, holding up well. We're waiting on either a breakout over 88.35 or a breakdown under 82.50. But for right now, we're not, we're pretty much right at the mean of the linear regression channel. So right now, Expedia is probably the best looking stock we have. And that's because it's just really moving sideways while the market is pulling back. So that's showing some relative strength. GD, we will be exiting GD. All right, GD, we originally had our stop here on the close from 9.2 at 122.50. We closed below that, but rallied back on 10.2, and then since then we've only put in one up day, and now we've reversed back and are actually lower than the close. You could see here that this longer term trend line is still intact, but I'm looking at potentially the break of these levels and the 50-day moving average, and now entering into the consolidation from here as a sign that it's probably best to just exit the trade at this point and look for it to set up again. So we will be exiting GD at tomorrow's open. LUV, Southwest Air. Again, we're looking and waiting to move that stop up to 31.75. Right now, we just need some either uptrend to reestablish itself. But just to, for right now, it looks like, again, downtrend is still intact. Right now, our stop is 29.39. And you can see that's where this longer term weekly trend line would come into play. So I want to make sure that we stay with the weekly chart on this one, and that's why we're using the 29.39. Should we get a move and a breakout over this downtrend line, we will gladly move our stop up to either 31.78 or potentially even the low of this move. But for right now, we are still in LUV trade. And the last one, RSG. This one looks like it's just ready to roll over. We should have exited. I messed that one up. We should have exited back when we broke on 10-1. We didn't. We had a couple nice days of higher prices, and today we pretty much took that all back. So I would not be surprised to see, again, maybe tomorrow, if we get some more weakness, for RSG to close below 37.86. For right now, though, we will stay in the trade until that happens. So out of the 7 positions, we're actually only exiting one, and that's GD. We have several very close. Disney, RSG, and ADM are very close. So is Apple. So, depending on how the rest of this week goes, we could potentially be left with 1 or 2 positions by the end of the week and reestablish ourselves as the market starts to be more favorable for us. But that's part of the game. Being in cash is a position, and if we move to cash, then we'll wait out the storm and have a nice fresh powder to redeploy when the market starts acting favorable for long plays. The only green stock we had today on the watch list was Este Lauder, EL. You could see that moved up to the 50-day and sold off. That one's still trending sideways, so nothing to do really in Este Lauder. Kroger looked like it may actually trigger. This really isn't a bad day considering what happened. So if we can get a nice green candle coming up, I would be more than happy to get into Kroger with a stop down here, say around $50. And the other one that's close to triggering, CCI, down 0.69. Again, we had the closed green box yesterday, so that's why we didn't take any entry on that. So again, if we can get a nice open green box, say maybe even something that closes above 81.50, which was the high or the open from 10.6, that would be even better. And then we could actually put an entry in CCI and buy the stock and put our stop under 78.35. For right now, though, it's really there's not much going on, not much to do. It's really more about preserving capital, protecting ourselves. If I looked at the model portfolio value today, and we were at, I think, 99,500 or something along those lines. So from our closing high to where we are today, as bad as it seems, we've only actually lost 6%, actually 5%, because we're coming off of 106. So we are down a few $100s for the year from when we started back in July. But for right now, I think be down a few percent and have a lot of cash on hand, and the fact that we're not giving back a lot of or losing a lot of money. I know we gave some back, but again, within 5 to 8%, I feel is reasonable. Once we start kind of going over that 8% threshold from top to bottom, that's when I get a little concerned and really try and tighten up stops a little bit more. But for right now, I think everything is falling into place. Of course, the market's not cooperating, which doesn't help our situation, because obviously, a rising tide lifts all ships. And, right now we'll see if we can turn around and get some good entries and ride some prices higher. So that's it for tonight, guys. Thanks for watching. Please follow me, StockTwits, Twitter, Google+. Subscribe to the YouTube channel, and make sure you check out the new website I launched last night. So I hope you guys enjoyed that. Take care.